Love him or hate him, Donald Trump has brought a new level of unpredictability and excitement to the markets. But let's be real, I've spoken to a lot of you and I'm actually kind of surprised that many of you were actually not trading during Trump's first term. As someone who's lived through these wild swings, when a single tweet could send the futures market, stocks, currencies spiraling after hours, I'm here to give you the benefit of my own experience. And I can tell you that oftentimes Trump likes to make these big announcements and these headline-grabbing comments after market hours. So stick around because today, in this video, I'm going to break down 5 essential tips to help you survive and thrive in these types of turbulent markets. And don't forget to like this video, subscribe to the channel, hit the bell so that you can get more trading tips, trading ideas, and so that you can basically get what you need to stay ahead of the chaos. Let's face it, Trump era markets are not for the faint of heart. You got a taste of it in the first few weeks of his term. A single comment during a press conference or a single post on a social media platform could send the Dow crashing, could send currencies skyrocketing or falling because of a late-night tariff threat or something else related to immigration or trade. That could make the futures market swing wildly during the Asia session and also before the opening bell. These are not slow and steady markets. They were fast, erratic, and often felt completely irrational. And while some of this unpredictability did scare some people away, for experienced traders and for those of you watching this video, it can be opportunity. Whether it was tariff threats, unexpected economic announcements, or retaliation from other countries, the Trump years taught us one thing. You need to be disciplined and prepared and have the skills to navigate through this type of roller coaster. That's why I put together the survival guide. I felt like it was necessary because so many of you actually told me that you were not trading during Trump's first term and that you're relatively new, which is good because hopefully these tips can help you. So let's get into it. My first tip is to shrink your position size. Think of volatility like an untamed animal. It's powerful, but it's completely unpredictable, and it could come at any time of the day, whether you're sleeping or awake. In markets driven by high-stakes policies and emotional reactions from the president, smaller position sizes are your safety net. I mean, Trump is unfiltered, so the comments are not going through a mind that cares about how it could impact the markets in that immediate time. So when swings get wild, small trade sizes can help to limit your losses and keep you in the game. Big bets during uncertain times, that could be a recipe for disaster. So keep it tight, keep it controlled, and don't let volatility knock you out because you're going to need wider stops if you're sleeping, and smaller position sizes could be what saves you. Tip number 2, diversify like a pro. We all know that diversification is key, and ever more so during Trump era markets, because there's one lesson that you should know: putting all your eggs all in one basket could be dangerous. One day it could be a tariff threat tanking the sector, the next it could be a tax cut making the market soar. The smartest thing for traders is spread out the risk. So for my Forex traders, what that means is to look at non-US dollar pairs, the crosses, like Euro CAD or Euro Swiss, where maybe there's a tariff comment that poses a risk for Canada, but there's nothing for Europe at this time. Being in the crosses can protect you a little bit from being overly dependent or overly exposed to US dollar headline risk. For stocks, CFDs, diversification across sectors, across markets like the DAX and the Dow or the NASDAQ and the Nikkei, or gold and oil. And so even diversification again across bonds and commodities or even crypto could save you. The more you spread out, the less likely a single comment or event can wipe out your profits or sabotage your portfolio and positions. Tip number 3. Set stop losses religiously. Volatility doesn't care about your plans. A late night post on social media can destroy your positions if you're not disciplined. That's why stop loss orders aren't optional under Trump era markets. They're essential. And because we know that we could have these huge up and down swings while you're sleeping, you need to set your stops wider probably in order to accommodate that. Stop loss orders protect your capital by exiting positions, before things spiral out, while you're sleeping, while you're away making your coffee or getting lunch. And mental stops are just not going to cut it because you never know what's going to happen. Always have that emergency stop in no matter what. Because in turbulent markets, Hope is not a strategy. Discipline is, and putting your stop in is absolutely essential. Tip number 4, keep cash as your secret weapon. Cash isn't just for safety, it's your opportunity fund. In the Trump-style market, there will be sharp dips and surges that can happen without warning. And having that cash on hand means that you'll be able to jump and pounce on these moments and buy in those crashes when others are panicking and trying to flee. Traders who kept liquidity ready during Trump's first term often turned chaos into profit. Don't underestimate the power of having cash when volatility is high. Tip number 5, don't get emotional. Don't get too attached to your trades. The market doesn't care about your feelings or your opinion. Any single tweet or social media post can turn your best trade into the worst one and a loser. And the longer you cling to a bad position, the worse it can get. Successful traders know that Trump's first term, they learned to stay pragmatic and adaptable. Admit your mistakes. Admit that the market sentiment has changed. Admit that the story has changed and cut your losses quickly and move on. Trading is about discipline, not emotions. You need to be adaptable, especially in Trump-era markets where a single comment could legitimately change the outlook. The moment you get too emotionally attached to a trade, you've already lost. So make sure you watch the markets and watch market sentiment carefully so that you can adapt accordingly. Here's another tip. Before entering your trade, calculate what your worst case scenario is. What's your maximum loss? How much are you willing to lose? Can you handle it? Can you live with it? And based upon the amount, determine your position size as well as your stop. And so if you need a wider stop, take a smaller position. If you want a bigger position, take a smaller stop. In volatile markets, surprises are inevitable, but preparation is what separates the winners from the losers. Preparation is how you're able to survive and hopefully thrive in the markets. And trading in turbulent times isn't about predicting every market move. It's about staying disciplined, making sure you have the risk controls in, sizing accordingly, and being adaptable when the volatility strikes. The Trump years showed us how unpredictable the markets can be, and you all got a taste of it in his first few weeks in office. But they also remind us that volatility can create opportunity for those who are ready. Now, if you found these tips helpful, please make sure that you subscribe to the video, like it, and share it with any trader that you think could benefit from this Trump market survival guide. And remember, stay sharp, stay disciplined, and I'll keep creating these videos to help you become a better trader. I'll see you in the next video.